Hello everyone, my name is Mr. Chill. Today I'm going to walk you through the CEBA loan, the Canada Emergency Business Account Loan. Introduced during the height of the COVID-19 pandemic back in mid to late 2020 as a way to help struggling business owners. So what exactly was this and what do you need to know? The first thing I want you to know, in case you don't watch any of the rest of this video, mark down on your calendar, circle, highlight, underline, whatever you got to do, January 18th, 2024. That is the current date and repayment deadline of the CEBA loan. Failure to act by that date, there are things that will happen, many of which you won't like. So let's recap. What was the CEBA loan? Iteration 1 of the CEBA loan, Government of Canada, in conjunction with whoever you bank with for your business, gave you $40,000. 10,000 of which would be forgivable if you repaid it by their stated due dates, and it was interest free. They came out with an iteration 2 between 6 months and a year later, where they bumped it up to a total of a $60,000 loan, of which 20,000 was forgivable. So this is no small change. Even in a economy right now with super high interest rates, iteration 1, 25% of the loan was forgiven. Now in iteration 2, 33% of the loan is forgiven. So it's worth taking a look at. Now, the CRA has pushed back the deadline on this a couple of times, so let's talk you through that process. Originally, it was due, the non-forgivable portion was due December 31st, 2022. That date was getting close and business owners were getting scared, and business organizations were lobbying on behalf of small business owners across Canada, saying we need more time. Government listened and gave a free 1-year extension. So everyone would get the forgiveness portion, still interest free, as long as they repaid it by the new deadline of December 31st, 2023. That was about 12 days ago at the time of this recording. So in about four months ago, they came out with another extension to the CEBA loan. However, it was not as good as it was purported to be. It was originally announced and thought they were going to extend it for another full year. So you would have until December 31st of 2024. But that was not what happened. They actually only really extended it by 18 days. So instead of December 31st, 2023, the new and current deadline to repay the CEBA loan and still get the forgiveness portion and still be interest-free is January 18th, 2024. That's this coming Thursday. So if you find yourself in a situation where you've already repaid the CEBA loan, congratulations, you don't have to worry about this anymore. If you're one of the many business owners across Canada who took the CEBA loan and has not yet repaid it, and possibly you're dreading January 18th because you know you don't have the money to repay it at this moment, here's some options for you to consider that would be better than not doing anything. So let's talk about what happens if you don't do anything. So January 18th, 2024 comes, you don't pay it back, either because you forget, because you don't have the money, because a variety of other reasons come along. What's going to happen? Well, one day later, January 19th, 2024, you are going to find yourself having been auto-rolled into a 3-year loan at a 5% interest rate. I've crunched the math on that, and your payment on that arrangement would be approximately $1,709. And over the course of that 3 years, at a 5% interest rate, you would pay interest approximately of $1,554. So if you do nothing, that's what happens. I wish that was the worst of what happened, but the worst part of what's going to happen on January 19th, if you don't repay it, or if you just don't do anything, is you're going to lose that forgiveness portion. That $10,000 of the 40 or the $20,000 of the 60, you don't get to keep it anymore. It's not forgiven. You'll have to pay back the full $60,000 loan. This is probably going to be one of the costliest days in Canadian small business history, because enough people are probably not going to be able to repay it and are going to miss out on that $20,000 forgiveness. So that's what happens if you don't do anything. So hopefully that's not you. Hopefully, if you find yourself not having repaid the CEBA loan, you don't choose to just do nothing. Don't accept that rollover. It's not a great option at all. So what are some other options that you have? Well, when they extended the deadline to January 18th, 2024, the Canada government also kind of had a side addition to that, which is you could approach the bank that houses your CEBA loan and you could say, I want to take advantage of this Government of Canada's free extension to March 28th, 2024. I used the word free probably incorrectly here. It's free as in it's guaranteed. You don't have to qualify. It's not based on your lendability or your credit rating or your bank, how much they do or don't like you. The Government of Canada guarantees you this extension to March 28th, but it's not free in that it will cost you interest. I don't know what the interest rate's going to be. It's not stated. My guess it would be at current interest rates, which is right now probably hovering around 10%. So option 2 is you proactively approach your bank prior to January 18th, 2024 and say, I would like to take the extension to the end of March. And they'll say, okay, we're going to roll it over into a 3-month interest-bearing loan, at which point you will repay it on March 28th, 2024. We'll again assume about a 10% interest rate. And the nice thing is that you will still get the forgiveness portion. I estimate that would cost you about $501 in interest for those 3 months of payments. Now, the problem is that if you don't have the funds to repay this loan next week, it's not highly likely that that situation is going to drastically change by the end of March. Maybe it will, maybe it won't, but it's something. It's just not great. So what are your other options? Are you stuck with the rollover and losing the forgiveness? Well, if I were you and you find yourself in that situation and March 28th still not going to be enough, I would be actively approaching your bank. And if you have to, I would go shop around to other banks and see what they're willing to do. See if they'll lend you the $40,000 you need to repay by January 18th to your bank, and then you'll be financed in the new loan, but just $40,000 of it instead of the full $60,000. Again, you're probably going to be looking with the economy right now at about a 10% interest rate. But even at a 10% interest rate, you would pay about $3,133 in interest, and you'd be getting $20,000 of forgiveness. So it's probably still well worth it, even if you have to pay higher than 10%. Even if you have to find a loan that spreads it out over 5 years, you're still going to be saving a lot more in the long run by getting the $20,000 forgiveness and paying interest on a new $40,000 loan than you will if you if you lose the forgiveness portion. So please don't do that. Now, the loan is technically under the guise of your company. For many of you, it would be your corporation. If your corporation cannot get funding and does not have the money, you could lend the money to it as an owner, either because you have it in a personal savings account that you can kind of loan the company, and I'd highly recommend you do that if that's an option, or because you have access to personal line of credits that you have, and you're going to use a personal line of credit to grab $40,000, lend it to your company pays back the CEBA by January 18th and gets the forgiveness portion. So there's lots of options. Again, please don't accept the default of just letting it roll over and becoming a 5% loan, because you're going to lose that forgiveness portion, and you do not want to do that. The one other thing I wanted to mention is how this income is treated. So loans are not income, but when you have a loan and a portion of it gets forgiven, the forgiven portion becomes taxable income, in this case, taxable income to your corporation. Now, the CRA did something a little bit unusual. It goes against all typical accounting rules and practices, which is they asked you, and by extension your accountant, to consider the forgiveness portion having been granted from year one, and being taxed in your corporation as though you already got the forgiveness. Like I said, that goes against every accounting principle we've ever been taught and that CRA usually follows, but I think they wanted at least some of the income back, that the money back that they're lending for this program. If you or your accountant didn't do that, that's probably okay. I haven't heard of anyone being penalized for that, because in reality, in most any other circumstance, you would wait until you actually received the forgiveness portion before you recognized it into your income. But either way, if you took the $40,000 and you're getting $10,000 forgiveness, that $10,000 forgiveness is going to be taxable income to your company. If you took the full $40,000 or $60,000 version of the CEBA and you're going to receive $20,000 forgiveness, that $20,000 forgiveness portion is taxable income to your company. Now, the good news is that most of you are going to be small businesses and be paying tax at the Canada small business rate, which here in Alberta is currently about 11%. Other provinces in Western Canada and across the board, it's going to vary a little bit, but it's still going to be close to that. I hope this helps your evaluation and understanding of the CEBA loan. Again, just to recap, the important day you don't want to miss, you don't want to just ignore, is this coming Thursday, January 18th, 2024. On that date, you either have to proactively have done something else, you have to fully pay back the non-forgivable portion of your CEBA, or you're going to auto roll over into a 5% 3-year loan, and you're going to lose your forgiveness. So please do whatever you got to do to get that forgiveness. My name is Mr. Chill. Thank you for watching. Have a great day.